You are listening to chartingwealth.com's comprehensive review and forecast for the week beginning Monday, the 9th of July, 2018. I am exhausted. I was supposed to leave home to fly near the West Coast to Phoenix on, I guess, West Coast time from the East Coast at 6 a.m. Well, we got halfway to the airport and one of the travel companions didn't have the documents they needed, so we went back and we missed our 6 a.m. flight and our 9 a.m. arrival in Phoenix. Instead, we got to drive to a diversion airport an hour and a half, get on a plane at 11 East Coast time, and finally get here at about 3:30. So at that point in time, I'd already been up something like 14, 15 hours. And now it is 7:42 West Coast time, which of course, I don't even want to think about how tired I am. Anyway, all that said, I hope you are having a fabulous weekend, and I will do my best to cover this for you. Another heads up, we are traveling this week out in the Grand Canyon. We will be attempting to bring our offerings to you as best as we possibly can. I can't promise anything, but we'll do all we can to get them to you. If you guys remember a few years ago when we were traveling around Spain, around the Spanish coast, we had a very hard time until we got to Gibraltar doing much of anything for you. So don't forget, if you hadn't purchased the book, please do buy it. We would so appreciate your support. There's a link at the top right-hand corner of the video right now, and you always see links at the website, chartingwealth.com, under the comprehensive review and forecast posting, as well as at our YouTube channel, and as well as in the emails to all the subscribers. So thank you so much for being with us. All that said, I just needed to get that off my chest. I hope you'll forgive me for wasting your time with it. Let's jump into the market. We see stocks and bonds up, gold down. How did the week end? Well, we look at the S&P 500. We have a green spinning top. We sure thought, particularly at the beginning of the week, we're going to have a crossover going down. It did not do it. It actually bounced off the red signal line. Well, it really just hit it and paralleled it. And it did not end up crossing over, so we don't have a weekly vertical crossover going down. We have a green spinning top, which means indecision tending up. As we look a little deeper, what do we see on the 2-day chart? Well, my gosh, it seems to be heading up as far as, again, the price percent oscillator is moving up. The derivative oscillator is losing downward momentum. We have one completed 2-day candle and another one that has started, and again, a strong one, up 0.85% on Friday. So we'll watch and see what we see. If we see this 2-day chart crossover going up, of course, it signals that we might be able to get into more up moves on the S&P. We'll watch as that happens. What's the 4-hour chart doing? Of course, it's steaming up, crossed over going up back in the afternoon on Monday, the 2nd of July. Then it sort of went sideways and then really started moving up in earnest on Thursday afternoon and Friday. So that's where we are on the S&P 500. What do we see going on the Qs? Up 1.56% for the day on Friday. The week ended, again, with a green spinning top. It wasn't as close to crossing over as the S&P 500 was. Again, this is the NASDAQ 100 QQQ. And we see the derivative oscillator losing upward momentum, price percent oscillator actually headed up just a little bit. What do we see going on the 2-day chart? Well, we see that 2-day chart again, derivative oscillator losing momentum, price percent oscillator heading up. Candles are growing in an up direction, of course, penetrated the 2-day trend line pretty significantly. And then we look at that 4-hour chart. What do we see? It bounced off the red signal line, and we see the 4-hour chart actually heading up on, that was Thursday morning, and then really took off heading up, I guess, Thursday afternoon and really on Friday. Because again, the Qs just accelerated up, blowing through that 2-day trend line on Thursday afternoon. So that's where we are as far as stocks go. Let's jump into bonds. Bonds up 0.33%. Remember, I had that weekly vertical crossover back on the 25th of May. Up for a week, then sideways for 2 weeks, and then up starting in earnest back on the 22nd of June. Completed the third week of some nice strong up movement. Stair steps up on the derivative oscillator, price percent oscillator spiking up. We see on the 2-day chart, again, continued up movement well above both the weekly and the 2-day trend line. Derivative oscillator gaining momentum, price percent oscillator heading up. What do we see on that 4-hour chart? Well, it bounced off. Had a nice jumping in point in the afternoon on Thursday, up on Friday morning, paired off a little bit of that in the afternoon. So again, derivative oscillator moving up, price percent oscillator heading up. Things continue to look nice. Again, I like it when we see the magic of the weekly vertical crossover showing itself to us. Lastly, we go into gold. Gold down 0.16% for the day. A big strong down candle, another week of strong down movement in gold. Price movement below the 2-day, well below the weekly trend line. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. On that 2-day chart, what do we see? Well, we broke through the 2-day trend line on gold and really started sliding sideways over the last 3 days. That happened back on the 5th, Thursday the 5th. And of course, we're just the first day of the latest 2-day candle, which appears right now to be a red doji. Really not much movement at all there. We look at the 4-hour chart. What do we see? We see that 4-hour chart crossed over going up on the 3rd, and really that pullback underway. So what are we looking for? We're looking for gold to rotate over and head down. The derivative oscillator starting to lose some momentum at the end of the day. 2 red candles for the day. And again, gold down just a little, 0.16. So again, as the week starts, if you see gold rotate over going down on that 4-hour chart, because the 2-day is still in a confirmed down move and the weekly is, you might, and again, you might have the chance to jump in on an inverse trade, that is to purchase a put option most likely. Sell short is what we call it. Of course, you can also look at an inverse gold fund. The only problem is their bid and asks are pretty far apart, which means they're not very liquid, makes it difficult to make a decent profit on it. But practice nonetheless, noting where you would jump in and then see how far you can ride it down. All your practice, needs to be done seriously. You need to look at those numbers. You need to hold yourself accountable. Easiest way to do that, of course, is with our Stock Traders Journal, which we post for you every day, the PDFs for the daily market review, your weekly market review, and your traders market journal. And we have all of those worksheets for you. Weekly market worksheet, daily market worksheet, trade worksheet, all that available for you at the website, at the YouTube channel, in the notes, and of course in the email we send out every day. My friends, thank you so much. Do purchase the book. If you help us out with that, of course, we're offering a special training on the 15th of July just for the people that purchase the book. What is it? Well, it is short chart trading, and it is how to use the 2-day chart to find potential trades on the short chart. That is, when to jump in and how best to chart things on that 2-hour chart. If you're interested in learning to short chart trade, we'll give you some tools to start practicing that process. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters. Hope you have a great weekend and a wonderful week.